3, 2, 1.
Here we go!
Hi and welcome back to my channel. It is the Reality Sarina and I am your host, Chango Unchained. In this episode, we welcome Jaime Rogozinski, the original founder of the Wallstreetbets subreddit. On this episode, we interview him to talk about his history, why he started the sub, where he comes from, and his insights into what occurred that caused a confluence of events that created the now infamous Wallstreetbets GameStop phenomenon. Now, with Jaime Rogozinski, we talk about his upcoming Hollywood movie deal that was just recently signed, so we could anticipate a Wallstreetbets movie down the line. Now, with Jaime Rogozinski, a lot has unfolded with the history of the Wallstreetbets subreddit. There were some drama, there were some conflicts, and we go into what happened. All of that may or may not be part of the story in the movie that was sold, and Jaime gives us some hints as to what the storyline may consist of. Now, with him on our show, we asked various technical questions about what happened on the day of the GameStop phenomenon crashing the markets on Wall Street. He talks about options trading and schools us on the fundamentals. Jaime clearly has a vibrant history in Wall Street and is an experienced trader. He himself has many projects ongoing, one of them being an exciting new one, a Wallstreetbets coin. We don't talk about the Wallstreetbets coin on this podcast, as none of this is meant to be financial advice, but it is very good insight for you to know about what's up and coming in the crypto sphere and the Wallstreetbets sphere in the coming months. Without further ado, welcome Jaime Rogozinski.
Welcome to the podcast, Jaime.
Hi, thank you very much for having me.
Can you tell us a bit about your background and your relationship to Wallstreetbets since its inception?
Sure, yeah. So I guess my background, I'm a dual citizen. I live in Mexico now, but I lived most of my adult life in the US. I've been back in Mexico for about 6 or close to 7 years now. I have a background in technology, economics, and finance. And I founded Wallstreetbets in 2012 when I was living in Washington, D.C., working at a bank. I had a decent disposable income and looking for a place to put my money to work in a way that was a little more risky than is typically used when you're doing diversified investing, these long-term time horizons, and created Wallstreetbets.
And why did you think that creating a subreddit would help you progress in your personal finances?
You know, I really wasn't looking to necessarily progress in my personal finances. I was looking to learn, and I was looking to, I was hoping to make money, that's for sure. I had a retirement fund that was the typical 401k or Roth IRA that I was putting into from my job. And this is going to be your typical mutual fund, index fund, et cetera. But I wanted to see if I could make a little extra money with money that I could afford to lose. And there was no place online that would be the happy medium between wanting to take risk, having a shorter term time horizon, and not being professional traders. Typically, the traders that do these short term in and out trades or day trading, swing trading, et cetera, they tend to be professionals and they dedicate their lives to it. I had a job and wanted to keep that job and continued to have jobs ever since then. And there was just no place that would want to talk about ideas on how to take some risk and hopefully make some money.
Right. So the goal seemed more like centered around having a crowd of people kind of come and learn how to do this day trading thing as a side hobby.
Yeah, day trading, swing trading, just random trading. Some people take it as far as gambling, etc. And it turned out to be a place that attracted a lot of amateurs like myself that wanted to learn. And because of the fun nature of the subreddit, because of the slapstick approach of wanting to joke about things and be just as honest about posting losses as well as wins, and try to take a fun approach to this, it also ended up attracting professionals. So any professional that you speak to that is a trader full-time will tell you that if you're doing your job properly, you're going to be bored, right? It's boring when you're doing it correctly, because they are mitigating risk a lot. They're waiting for their setups. They're scanning a ton of things, and they all have their own different routines. But it's a strong discipline, and it's not supposed to be exciting. It's supposed to be controlled. And they have a lot of downtime as a byproduct of this. And they stumbled into Wallstreetbets and found this was a good place to pass the time as they were trading throughout the day. And that ended up creating a really neat combination of people wanting to learn it and people wanting to teach.
What's interesting is now these traders have become professionalized in that these hedge funds are trying to hire meme stock traders. They they want people with...
It's turned around. So I don't think that they're necessarily looking to trade to find a meme stock trader because he's really talented. I think it's more the fact that Wallstreetbets has grown, and just, amateur retail traders as a whole. These are traders that are using Robinhood or trading from their cell phones, etc. They're big enough now that they are not to be ignored. So previously, if you had in the late 90s, you had the famous Yahoo message board where people were just passing around stock tips and things like that. There was no reason for hedge funds or any type of other institution to pay too much attention of it. These guys are just on the sidelines speculating, and their participation has no effect on the market. Whereas now the size of the retail traders is very, very big. I mean, last I saw, it was like in the 25% of the volume is coming from retail traders. So I think they're more interested. I don't think there's interested in the skill of a particular meme trader. I don't think that there's yet to be a proven approach that is replicatable and that fits with their thesis. But I think they want somebody that understands social media, that understands how to see these trends coming and are able to communicate, participate, and decipher a lot of what's going on. And I think that's what they're trying to get, is a little bit of exposure into the retail sector, which now has to be considered.
In your Chat with Traders interview, you referenced the tagline, Wallstreetbets is to the 4chan discovering the Bloomberg terminal, which...
Yeah, so that was a tagline. When I created the subreddit, you come up with the theme, the rules, the colors, and you're supposed to come up with a little tagline. And at some point,
pretty good one.
There was a rival subreddit. I think it was not rival necessarily, but it was kind of a parallel subreddit, our finance. And they were talking about Wallstreetbets, and they were talking about how just outlandish they are and how much they like the risk. And someone said, look, Wallstreetbets can best be described as 4chan finding a Bloomberg terminal. And that was a very appropriate and succinct tagline. So I just kind of lifted it from there and put it on there, and it's kind of stuck ever since. And it's continued to be very appropriate.
It sounds like they were trying to make fun of our Wallstreetbets, and then you kind of took it and owned it. Pretty
much. And that's really the ethos behind Wallstreetbets. When you watch finance professionals, insiders comment on things that are going on on Wall Street, they've referred to it as a casino, oftentimes in a derogatory manner, right? They did that in 2008, they did that in 2000, they did that in 98, they did that in 87, so on and so forth. And it's always meant to be kind of an insult, like, oh, these big banks are treating Wall Street like a casino. And that's really Wall Street saying, yeah, it is. And we're not apologetic about it. We're calling it what it is, and we're happy about it. And we're just participating in this and treating this as it is, without really trying to cover it up their behavior by using fancy acronyms or explanations that go over the heads of most people.
Mm-hmm. Yeah, that's something similar to what they do with the cryptocurrency industry. They call it a shitcoin casino, which is the tagline lovingly dubbed for decentralized finance or DeFi. And so perfectly familiar with that kind of derogatory language.
Yeah, so, but you think it's interesting because you know the stock market is speculating. In fact, in most languages, the word for trader, it is in Spanish at least, is literally speculator. That is how you translate a trader, someone who trades.
And how do you say it? What's the word?
Especulador, speculator. And, you know, that implies that you're guessing, right? Speculation is just pretty much guessing, trying to take an educated guess or trying to take an approach, but everyone guesses and everyone takes a loss. I mean, Warren Buffett gets it wrong occasionally. He's obviously very talented and he's really good and he gets it right more often than he gets it wrong. But this last year, obviously, he took a big loss with the airlines, coronavirus, et cetera. And all you can do is try and guess the outcome. And most people's approaches, they try to tailor that guess into their objectives. And so if your objective is to be able to retire in 30 years and you want your money to keep up with inflation, then there's ways of doing that. And you're speculating, you're kind of hoping that the market does what it's been doing and that when you retire, there's not some huge depression or some huge crash. But for the most part, you diversify enough so that you're making your few percent a year. And that's pretty much what you wanted to get out of the market. And you have algorithms that do high frequency trading that in their own way are using formulas and they're using statistics and they're banking on the proximity they have to these exchanges because they want speed to be a factor of it. And they get it wrong sometimes too. One of the most famous quant funds in the world, the Medallion Fund from Renaissance Technology, lost money last year. And it's never lost money. It's usually gotten an impeccable record. And so everyone is speculating. It's just these guys are saying that's right. You know, the HFT, the high frequency guys are saying, no, we're doing the mean reversion, this and that, and the other. And the guys that are doing the long-term investing, oh, well, the book value and the fair value and the discounted cash flows and this is undervalued and blah, blah, blah. And the technical traders will say, oh, look at this pattern. We have a head and shoulders coming up into this channel with the ascending wedge and whatever. And they all use kind of language that makes it sound real sophisticated to explain their version of speculation. And what they do on Wallstreetbets, and they do a lot with DeFi as well, is, well, with DeFi maybe a little bit less, but you know, on Wallstreetbets at least, they're saying, yeah, we're not going to draw patterns on the chart. We're just going to say it's going to go to the moon, and that's our version of speculating. And we're guessing just as much as the next guy, except for we're owning it on our sleeves.
Which brings me to this notable phenomenon called the meme stock that kind of emerged, and it wasn't existing before Wallstreetbets, which is I like to call the meme stock like a cheating spouse gone rogue, because it's divorced a stock's underlying business fundamentals and went and cheated on it with its mimetic fundamentals. And so now Wallstreetbets is kind of trading based on the quality of memes and really nothing else. And the fact that hedge funds are shorting it.
I mean, you'd have to argue that the stocks were tracking fundamentals to begin with. Over time, it tends to be the case that happens, right? If you zoom out long enough on a chart and you, I mean, you're not looking at the daily or the weekly or not even the monthly. I mean, if you look on a yearly basis, you can kind of track things back down to fundamentals, and that's what Warren Buffett does. But on these timescales, none of these stocks have anything to do with fundamentals. These short-term moves are unexplainable. When you have a random tweet that goes out, right, by Elon Musk or Donald Trump or whatever, they would just send these markets going haywire. When Obama was president, I remember somebody hacked into the Associated Press Twitter account and they sent out a false tweet that said that the White House had been bombed, and that crashed the market like crazy for a couple minutes until they fixed it. And, you know, you go back and you say, okay, well, this company dealt with making zippers for your jeans. What does that have to do with the White House being? Yeah, how did the fundamentals? How are they affected by a bomb in the White House, right? And so you can kind of try and work your way backwards and explain it. But we saw a huge disconnect with the fundamentals last year when the stocks crashed 50% because the world economy was coming to a halt, and it did come to a halt. And the stocks bounced back really, really quickly. And they bounced back long before the jobs were coming back, long before the supply chain issues were getting fixed. And in retrospect, it's really easy to say, well, that's because people are foreseeing that they're going to be fixed, and they're foreseeing that the jobs are going to come back. But my counter argument to that is, well, why did the stocks fall in the first place, right? If these guys are forward thinking and they're saying, well, the jobs are going to come back, the economy is going to recover, therefore the stocks only took a month to bounce back up in record time, then I would say they should never have dropped, because yes, we had coronavirus, yes, the world economy grew to a halt, but I think we all knew it was going to be temporary, right? And we knew that at some point things would bounce back, and so I could come up with infinite number of examples. And so, yeah, the fundamentals, arguably on these shorter term time frames, have nothing to do with the price moves.
Right. So I watch a podcast. It's called Timcast IRL. I don't know if you watch Tim Pool on I know
YouTube. Who he is, but I haven't watched that podcast.
His thesis about why stocks didn't plummet, or why stocks recovered so quickly, is because it's the high skilled labor with wealth that's trading stocks and getting into Bitcoin last year. And into real estate and land, for example, and those are the things that kept their value and kept going up, as opposed to everything else that kind of were hurt by the stimulus, by inflation, basically.
You know, one of the things that when I started learning about this a decade ago, I noticed this kind of a weird trend that whenever the stocks would do something, you'd see headlines. And well, first of all, you'd see people searching for headlines. Why did the stocks just do what they did? Why did the indices just move? And sometimes there was a valid reason. Sometimes there was a fake tweet, but oftentimes there wasn't. Why did the stock just plunge so much? And people go looking for an explanation, and they'll continue looking until they find something that validates whatever just happened. And then you have the news organizations, CNBC, Wall Street Journal, Bloomberg, et cetera, Market Watch, that they all try to kind of chime in and explain why the stocks just did it. And I have a folder full of screenshots that I've taken of tweets or headlines or articles that are taken back to back, meaning one is taken on March 30th and the other one is taken on March 29th. The headlines are the exact contradiction of themselves, meaning right. These bonds are going up because there's optimism about the vaccine. And then they'll say these bonds are going down because there's optimism about the vaccine, right? They won't even switch both sides of the argument, and they try and go back and validate. And much more often than not, you have no actual cause for these things. And so I'm very hesitant to really buy into many of these theories as to why things did what they did for the most part. Sometimes on the macro scale, things tend to have more of an explanation. We have had some really crazy moves with Viacom and things like that this past week, where they've lost nearly 50% of their value. Those things do merit an explanation, right? GameStop going up for some ridiculous amount of money also merits an explanation. And most likely, people that did research into that move are hopefully going to be able to be right. You can attribute some ridiculous moves to some actual technical events that created it. But everything that lies within the standard deviation or two of its usual movements, I just consider noise.
So from your perspective, what was the confluence of events that unfolded to create that avalanche of an overnight movement that some are calling Occupy Wall Street 2.0?
With GameStop?
Yeah.
There was a bunch of things. The confluence of events really started brewing probably on, when the 1.0, the Occupy Wall Street 1.0 was taking place. You had a mentality that was kind of set in stone for younger generations. These would be mostly millennials, eventually the Generation Z that came into it, and they're growing up with, they're scarred, or at least they're marked by the financial crisis. A lot of these guys graduating college and not able to get jobs.
Yeah, that would be my generation.
Precise, mine as well. And you had people whose parents lost their jobs or maybe their house. And so there's just this distrust towards Wall Street in general. And I also believe that is part of what made rise also to these decentralized, to these digital coins that are coming out, and Bitcoin and all everything that followed from there. It kind of shares that same root. It's like, look, let's just do our own way. We can't really trust whatever it might be, the Wall Street, the central banks, whatever. This is something that you can play with, but not something to rely on. And then you start having a bunch of discount brokers that are coming out that are giving people access to stock options, and eventually you have brokers that are free with no minimum requirements, with instant funding, with applications from your cell phone that are very simple, very easy interface. And so now you're starting to get some of the formula. You have people that mistrust Wall Street, you mistrust the system, and then you have a lot of people getting interested to these things. And you have the availability, the access to tools and brokers and all sorts of tools and instruments that allow people to take a lot of risk. And then we saw where that was coming. And at some point, and then you had just an organized collective, so such people on Wallstreetbets that got together. And then you had the famous viral, the catalyst would be kind of a viral video equivalent. It would be this Keith Gill that came out and started talking about that particular stock and started to gain traction. And he was the one that made things go viral. And that's pretty much the way that everything comes together. And then it's exacerbated by the attention, I think, that it got worldwide. The moment that you have Elon Musk tweeting about it and politicians calling for hearings and stuff like that, at that point, they're just adding fuel to the fire and helping it along. So I think that it was a combination of pretty much all those things.
You referenced Keith Moss, was that? Keith
Gill. It was the Roaring Kitty / Deep Fucking Value.
Right. Deep fucking value. Okay. Yeah, that was right. So him posting day after day for several years, at least 1 year about GameStop that helped catalyze things when
it did, but he was posting about it for a year before anything happened. That's what I'm saying. It's difficult for you to really measure or bring it to be able to isolate one particular event or one video of his or one post of his. It was combination of everything. And just like any video that goes viral, it just takes off with no rhyme or reason. His, one of them happened to hit, and it coincided with a lot of people wanting to get into this. And it was a stroke of luck. I think it was also a stroke of skill, because what happened with GameStop could not have happened with many other stocks. Like they would not be able to pull something like that off of Microsoft, for example. The structure behind GameStop, the short float, the stock options, the profile for all the open interest on both the puts and the calls. I mean, a lot of these things kind of came together and made it real susceptible to that type of move.
Can you go into more specifics about what was special about GameStop that made this all happen?
Well, you had a handful of things. So first, you had over 100% short float. I'm not sure how technical you want me to get into it, but the moment that something is heavily shorted, it just means that any price that starts going against the shorts, they're going to really struggle to close their positions out. And that closing of their position out is only going to raise the price higher, because they have to buy more stocks in order to close their position and cut their losses. So when you have over 100% of it, that means there's not enough shares in existence for everybody to close their position out. And so that's one thing. And that's something that's happened before. It happened with Volkswagen. I forget how many years ago it's happened. Although, the first example of a good short squeeze, a failed one at that, dates all the way back to 1907. So this is a maneuver that's well known to Wall Street, being able to short squeeze. But having a lot of people short or having a lot of shares short is one portion of it. And the other portion of it, you had a lot of out of the money calls and puts. And they were well out of the money, and with various expiration dates. And what that does is, so first, the stock price starts going up, and people that are short have to close their position at some point, and that means buy the stock, and that pushes the price up. The people that are hoping the stock goes up are buying the stock, or they're buying stock options. And buying the stock helps that go up as well. Buying stock options does a couple of different things. So the guys that sell you the options, you have people on both sides of the trade. And when you buy it out of the money call, or when you buy any call, but let's stick with out of the money calls, whoever sold you that call has to hedge their particular bet. They're hoping to make money on what's called a premium for the stock option. And they don't really care whether the stock goes up and down. And the way that they're able to cover their bet, in theory, if somebody sells you a call option, that means that you're long and whoever sold it to you is technically short, right? Because they lose money if the stock goes up. So they counterbalance that by buying stock. Buying that stock is called delta hedging. So when they sell you a stock option and they also buy the stock, they're delta hedging. So that they're indifferent. The stock went up and the price went up on the stock and they own the stock, so they don't care and they still make money on the premium. Then you have people who sold you puts. They have to do the same thing, except for they have to short the stock in order to hedge their bets. And so if you buy a put, somebody else sells you that put, technically they're long. And they have to short the stock as well, just in case the price goes against them. As soon as the price starts going up and away from your out of the money put, then they don't need to have that much hedging because the probability of them losing money continues to go down. And as that probability goes down, then their delta hedge can be reduced a little bit, right? And so they can reduce the size of their short position. And this is called gamma hedging. And they do that by buying back the stock. So and then the guys that sold the call options, if the price continues to go against them, meaning it continues to go up, after they've done their initial delta hedge, they have to then buy more stock to keep up with the math behind the stock options. So now you have a situation where the people who are long it are buying stock and pushing up the price. The people that are short stock are having to buy the stock so that they can close their position, and that pushes up the price. The people that sold you puts are having to buy stocks so that they can close out their hedge, and that's pushing up the price. And the people that sold you the calls are having to buy stocks so that they can continue to update their hedge. So now everybody that's touching GameStop at this point is long the stock, and they're all buying it up. And so that is a perfect confluence, and that's how you can have a lot of people with little money make such a huge move, because they are leveraging other people into doing all the buying for them.
Hence the meme diamond hands.
Yeah.
Got it. And so did you touch GameStop?
No, I don't. For two reasons I don't. One, I'm in Mexico right now, so for me to buy stocks and stock options, it's tricky for me. Moving money back and forth between the countries is expensive and problematic and things like that. So I stick to index futures and foreign exchange. So that's the first one on the technical reason. The second reason is GameStop's not the first stock that's done these crazy moves. We've seen it happen with a ton of other stocks, and there is a fair amount of luck most of the times when this thing has happened, where the stocks really go up a lot. They tend to 99% of the time that I've seen this, they end up going back down, and you can get caught holding the bag, right? So I've been there, done that. Not interested. I was more fascinated reading about it. As it turns out, the stock price has kind of kept up. I don't know what it's at today, but it's hovering that $200 range. So it doesn't appear that there's a lot of people holding a bag. It appears that there's a lot of people holding bags of GameStop.
Yeah, it seems to me like there's something more driving this hodl mentality on GameStop. Seems to be like people are buying into the movement, or the ideology about this being this grassroots Occupy Wall Street 2.0.
Yeah, I mean, there's more to it now, right? All the shorts have closed out their positions. I don't know. I haven't checked what the short float is now, but last I checked, it was under 30%, which is no longer prime for a short squeeze. And the stock options themselves are super expensive, meaning the premium is really high. So that's a way to mitigate that factor, meaning anyone that wants to buy stock options to trade this thing is now risking a lot of money. And so that makes the stock options less attractive. And owning the stock outright seems to be the best choice for that. I don't know what's been driving behind it. It's fair to say that everyone that's holding on to the stock has definitely played a role in it, because if people are buying up the stock and you can't get it anywhere, then that's going to keep the price up. And rumor has it a lot of hedge funds have also kind of dipped into it and joined the side of Wallstreetbets, and so they might be having a lending hand as well.
Yeah, that's really interesting. What do you what was your take on what Robinhood did with what Robinhood did along with all of the brokers that stopped trading the day of?
Yeah, it was Robinhood and all the brokers. Robinhood took all the heat because they're the biggest one, and arguably they're the one. All these millions of people trading GameStop, I'd say the overwhelming majority were using Robinhood, so they were the ones that could be able to take the heat. You know,
So they're called Robinhood.
Yeah, they are. You know, I think Robinhood and all the other brokers have a role. You know, they have responsibility in what happened. It's impossible to predict black swans. That's what makes these things black swans, and so it's very difficult to have somebody say, hey, be prepared in case you have a black swan. These things happen when oil prices went negative last year. You know, you had Interactive Brokers lose a ton of money because their programmers never put in the negative sign into their prices, and that caused all sorts of problems. You can't plan for the unforeseen. But this wasn't so outlandish that they couldn't have planned for. Basically, they ran out of money. You have regulations in place that force you to put up collateral when things are moving the way that they were moving. And they had to put up, I don't know how many billions of dollars, $2-3 billion. And they didn't have that money. It took them a day or so to get it. And I don't know what the other brokers had to put up, but all of them had to put up a lot of cash, and that takes time. And so, you know, on one hand, maybe they should have foreseen it. Maybe they should have had more cash on hand, et cetera. But it's also the system itself needs to be renewed. The reason why they needed to put up cash in the first place is because settlements take 2 days for the stocks to hit your account and the money go around. There's no reason for things like that to happen. Everything is instant nowadays. There's no reason why when I want to cash a check, it takes 2 days. There's no reason why a stock should, you know, these things should be able to be settled in real time, or at the very, very worst, every hour. That would fix a lot of these problems. And this way, all the brokers and clearinghouses and everyone that's involved in these stock trades are able to kind of adjust as needed throughout the day, as opposed to just getting slammed with these margin calls at the end of the day and saying, hey, you have 12 hours to come up with $3 billion.
Yep. And that was why people in the crypto community had a field day and said, this is why decentralized finance. We're really excited about that. Yep.
Decentralized finance most definitely has that problem figured out. I mean, it's not instant necessarily, not always, sometimes, but it's a heck of a lot closer to instant than to the settlement process.
Mm-hmm. And it doesn't close.
And it doesn't close.
Yeah.
That would be another solution to these problems. The stock market was open 24/7. That would force a lot of different mechanics to you know, a lot of people have to do rebalancing at the end of the day, leverage ETFs like futures, all, you know, there's a huge routine. If this thing is just open all day long, they'd have to rethink the entire process to a point where everything is dynamic and you're not hit by surprises.
How do you think it would change? And do you see it actually moving in that direction as the world moves towards fully digital 24/7 trading environment?
You know, I'm hoping it does. And I'm hoping it does because it makes the system more stable on more reasons than I can count. It's not just having access to something 24 hours a day because I want to be playing from my cell phone. It's once you have something that's open 24 hours a day, you eliminate ridiculous amounts of risk. You know, the biggest risk I would say with closing a market is called gap risk, right? So if something happens over the weekend, markets open up in the morning, and you know, all the stocks and futures, they jump right over your stops, and so that prevents you from being able to define your risk correctly, right? Everyone's got these parameters. They say, okay, well, you're going to take this trader, even if you're a responsible bank, and say, okay, well, you know, if this particular investment, whatever. If it moves 5% against you, we have to move. We have to get out of this because it's outside of our goals to be able to do that. And, we're not here to gamble, et cetera. But when something jumps 20% and it ignores your threshold, that starts creating a huge domino effect. And the other thing that would fix is this whole, all the futures having to rebalance, and the ETFs I'm particularly concerned about. They play a factor into this. They all make these maneuvers at the end of the day. And oftentimes you see these unexplainable moves at 2:30 in the afternoon on certain days of the week, or certain days of the month. And these moves that you're seeing aren't explainable by some story you'll find on CNBC or some tweet or some news. Oftentimes it's just these participants having to buy and sell in order to meet whatever goals they have to meet. And so these weird things that end up happening would go away. Everyone would constantly just need to be at par.
So would you say that the release valve would be this 24-hour, 7 days a week trading environment that would create stability for this otherwise
this valve will always be open. All the information will always be on the table. The stock market, one of the primary functions of the stock market is to give you a price, to give you a number, price discovery, and whatever it's showing you, that information is valuable. And having this metronome or having this start and stop clock is kind of a weird way of limiting that particular mechanics, and the types of risk that are introduced into the market because of it are also unnecessary at this point. I mean, we're not asking for people to be on the floor on Wall Street. A lot of these things are done by computers anyways. The volume overnights drop. The stocks, the futures are open 24 kind of 7 kind of 6 kind of, and you can see on these particular markets that liquidity usually dries up correctly. There's no people go home at the end of the day. They don't have to be 24 hours a day from their computers. You can continue having the regular trading sessions be the same time, but having the market open on all stocks and all stock options and on all instruments, everything that's both available on exchange and off exchange, and that would help a lot. Yeah.
Do you think that GameStop would have happened had the trading environment been open 24/7?
Oh, it still would have happened. GameStop didn't happen because the market closes. GameStop happened because of all the things that I outlined earlier. I think that what might have been mitigated. Sorry, so let me be more specific, because maybe that's what you meant by your question. The GameStop price going up the way that it did would have happened regardless. That was because of the people buying the stocks and the short sellers and all the stock options and all that stuff. The brokers having to limit trading on there, I do believe that would not have been a problem if the stock market was open 24/7, because the moment you open something 24/7, you're forcing the hand of all the participants involved to update their back end and update the regulation in place and update everything to say, hey, this whole T+2, what time do you do 2 T+2? Do you have to settle multiple times? Why don't we just do everything real time and call it a day? And then that facilitates and that fixes a lot of these issues.
Mm-hmm. Right. So I want to change the subject and talk about your movie deal now. This is something that came up on Bloomberg recently, less than 2 weeks ago. We talked about the Wallstreetbets movie. Can you tell us more about this deal? Is that disclosable?
I can disclose some stuff. The stuff that's public I can disclose. I was approached by lots of people and lots of parties and that were interested in making movies, documentaries, TV series, podcasts, you name it. All this craziness was taking place back in January, and got on the phone with people I never realized I'd be on the phone with, and it was an interesting learning experience. And I was approached by Rat Pack, which is a production studio, and they finance their own projects, and I signed my life rights, which basically means the story, my life story, and a lot of the details that I've never disclosed to anybody. to them so that they can make a movie. And I think they're going to make a documentary as well. And hopefully they're going to do a podcast about this. And yeah, I mean, it's all in the works. I know that there were other studios that jumped the gun as well. There was one from Netflix and one from, I think, MGM. And I kind of lost track there, but there's a lot of competing projects. There's obviously an interesting story to tell, and everyone's going to try and make theirs unique. I'm not sure that we'll see all the projects that are in the works actually come to fruition, but I wouldn't be surprised if you have at least one or two movies that come out that try to have a different take on that.
The specific movie that I'm referencing alludes to A-list actors and actresses such as Angelina Jolie, Seth Rogen. You know, they are going to be part of this Wallstreetbets movie. Is that the story that you've sold?
No, they haven't done any of the casting for that yet. Most likely you're referencing my signing with UTA, which is like a talent agency. Part of doing these things with Hollywood oftentimes requires having an agent that knows what they're doing. I don't know anything about Hollywood. I don't know anything about the movie business, nor am I very interested in learning too much about it. And I like what I do. And I signed with UTA after I signed the movie deal back in early February, if I'm not mistaken. And then last month it was announced that I signed with a talent agency. This talent agency kind of helps me a little bit with the movie. They didn't really play too much of a role in it. The article you're referencing kind of makes it, because this talent agency, or most of them at least, are typically associated with Hollywood and making movies. They like to brag about who they represent, but the talent agency that reps me also reps Michael Lewis, who writes these financial books. They reps a ton of politicians and a ton of other individuals that are not in the Hollywood space. And very specifically, I'm interested in what they're offering me in the world of esports. Before coronavirus, I was trying to organize this esports trading competition. I rented out the biggest venue in the US, and I was going to have this live trading championship where people trade their account. I have a stage with 10 or 12 people that are trading for a contest, and real money, live market, everything over a couple of days, and hoping to make some money, but with kind of a video game feel to it. And coronavirus put a hard stop to that. And now that it looks like the coronavirus situation is coming to an end, I'm wanting to resurface those plans, and UTA has an entire wing dedicated to esports, and so they're helping me with that.
Okay, they're helping you with your esports endeavor as well as the Hollywood movie.
No, the movie. Look, I mean, with the Hollywood, no. I signed a deal with the Hollywood movie myself. Like, I spoke to the owner of Rat Pack, or both of them, and the deal is done. I don't make movies, right? So I give them the rights to my story, and I tell them the story, and I kind of help coach them on different things that are more nuanced, and I give them a ton of details, and I give them emails and screenshots that I have, and pictures that I've taken, and all sorts of different things. I share them with me, and then they hire professionals. These are actors and writers and directors and all these different things, and they go off and shoot the movie. And so I don't, nor am I interested in taking too much of an active role in that. So once I signed the deal with them, they make the movie. I help them along. I've spoken with a ton of writers and producers and directors, to tell them a little bit about my story and tell them a little bit about myself, to see if I can explain to them what we're looking for, and to see if we can get interest from them. That's the extent of my involvement. This talent agent, like the movies, the deal is signed. There's nothing for talent agency there's nothing for them to do. I'm not going to go find another movie deal. It's just, this was kind of a one-off. But they definitely help with different aspects of it. Like if we wanted to get Angelina Jolie, because they're repping me, I could call them up and say, hey, can you see if you can talk to Angelina Jolie, see if she's interested? And they would probably do that. So, I'm much more interested in the esports aspects of it.
Okay. Can you elaborate more about what that process looks like? Basically the process of getting a movie deal signed, right? Like, I think that's something that's really opaque to everybody else outside of the industry. And so, you've had exposure to it. So very curious what that looks like.
I don't know that my experience is a typical one. Maybe it is, maybe it isn't. I can share to my experience, and I have a feeling that a lot of things in Hollywood are kind of done in an improvised fashion, right? Like so I'll share it to you with kind of how things played out, but I wouldn't say that this is the way a movie gets made in Hollywood, because I don't know. Maybe it is, maybe it isn't. But what happens with me, this GameStop thing starts blowing up. I get tons of requests from journalists to comment on the story. I start making interviews. I go on CNN and I go on Fox or Fox Business. I go on Bloomberg. I guess on the cover of Wall Street Journal. ABC, CBS, the morning show. Like I was just on a ton of these interviews. A lot of them were print media, and a lot of them were international. And at the same time, this thing is starting to get interest, and Hollywood takes notice. So I get a call from a writer that I hadn't heard of, but I Googled him after, and I kind of recognized his voice.
What was the name?
His name was Matt Ritter. Matt Ritter. And he's a really cool guy. I really, really liked him. And he explains to me, goes, dude, this is how it works, man. I really want to do this with you. And it turns out he's also being repped by the same agency that I ended up with. But he says, yeah, no, we're if you work with me and blah, 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 I'll write this really good thing and I'll sell it to the studio. And so the way that it works is you have all the people try to come together. These are writers and directors. And you kind of take a core crew and put a team together that's solid enough for you to take it to a studio. And in the studio, you say, hey, look at who I have on this team. Can you finance the movie? And then once the studio says, yes, I'll finance the movie, and that's pretty much when the movie gets made, right? And so this guy's kind of explaining that process to me. And at the same time, then I start getting producers from different companies, for different movies, and some really high profile ones, some ones that I had heard of before. And then I start getting a hold of different writers. I think it's public knowledge that one of them was Ben Mesrick, who ended up doing his own deal. He's the guy that wrote The Social Network. That was the Facebook movie. And he reached out to me on a similar capacity. It's like, look, this thing's blowing up. It's most likely going to make a movie, team up with me, and we'll have a really solid team that we can go to a studio. And once we pitch it to them, we'll get financing for it, and then this movie is definitely going to get made. And so that story kind of keeps moving along. And with me, I enlisted my brother for help with this, who's also a partner with a lot of the esports things. I said, hey, I'm too busy with life. See if you can take a crash course on Hollywood and figure out what the best way to do this is. And so he takes the reins, and he works through some contacts, and he ends up getting a hold of a couple of people that knew, a couple high profile people, a guy called Nacho Figueredas, famous in his own right, and a guy called Michael Smith-Liss, and a guy who, and then they put us in touch with a guy called James Packer, who's now a famous, a wealthy investor, successful investor. And then he puts us in touch with Brett Ratner. And at this point, we're talking to the actual studio. They're a production company, but they do their own financing, right? So at this point, we're talking to the top of the food chain, and there's no having to put the team together to pitch it. These guys are the ones that are going to make the movie. So they said, look, we'll pay for this thing, and we'll make a movie, and then we'll assemble the team, and we'll put it all together. And these guys have made hundreds of really high profile movies. And so that their experience really spoke for them. They've done a ton of the X-Men movie. They've done, the chances are out of any three movies that you can name, they've done at least one of them. So.
And just like The Social Network, the movie, they did highlight the drama of the origin story. So I do want to talk about this piece of drama, which is on the Wallstreetbets subreddit. The moderators pinned a post in February of this year titled "A Dark Part of Wallstreetbets History and Why It's Important for You to Know and Remember." So in the post, they specifically name you. So they said, despite being its founder, Rogozinski was kicked out of the forum in April, and they trying to eliminate hate speech plaguing the community. And so is this part of the plot that's going to be in the movie? And can you tell me if like what your side of the story is. Is this an ongoing battle?
Yeah.
Is there...
So, I'll tell you this much. Like the guys that wrote this post control Wallstreetbets and control the narrative. They have a lot of traffic, and there's no way for me to counter that, nor do I have any interest in it. I can say straight up that all of it is just fantasy. It's all fake. They're for some reason jealous or angry, or so. I'm not really sure why the animosity is there. I still am the founder of Wallstreetbets. I still created a thing that they're running, and so not sure where that comes from. What I can tell you straight up is all these things are false. I didn't read that post. I'm aware of that post, but I can assume a lot of the things that came from this. Last year when I was removed as a moderator, I saw a ton of conspiracy theories. At some point, they were saying I fled to Mexico because I'm a narco, flooding the FBI, and just this crazy stuff. And I don't really feel like dignifying most of those things with an answer. What I can tell you is there are, last I checked, like close to 9 projects, documentaries and/or movies. And I was the only one to get a significant amount of money. It's been disclosed, so therefore I can disclose that I've gotten paid 6 figures, meaning I've already received 6 figures just for signing with them. And that's a portion of the deal. The deal has a lot of components to it. And so that amount of money was justified because once I explained to these guys what the real story was, and once I showed them proof that I can back up my story, they said, this is a very interesting story. This is a much more interesting story than anyone realizes, and they want to be the ones to share that story. So I cannot tell you any of the details because that's why they paid me, so that I could be quiet about it.
Okay.
And keep the suspense. But I can tell you that it's good enough that they paid me a lot of money for the exclusive rights to be able to tell you this story. I can address, based off of public information, a couple of the things. Once again, I don't know if they're in that post or not, but I know that some of the allegations of why I was removed from Wallstreetbets were two. First, nobody disputes the fact that I created Wallstreetbets and I was with them until April, right? So it's not even been a year since I was gone. And there's 2 allegations. The first one is that I would try to profit off of the book. I wrote a book and I sold it. And
when did you write the book?
In 2019. So I wrote the book and I published it in January 2020, and I'm selling it for 3 months for people with a great reception. What was the book called? Called Wallstreetbets: How Boomers Made the World's Biggest Casino for Millennials. And you can find, it's the only book called Wallstreetbets on Amazon. So I write this book, which, by the way, includes writing a book, right? Yeah. So for anyone who's ever thought about writing a long essay for school, try writing a book. And then I promoted it on Wallstreetbets, and I promoted it on Ask Me Anything, and I promoted it on Our Investing, and I promoted it on Twitter, and I promoted it everywhere I could. I wrote a book. And for 3 months I was selling it, and then after that I was removed. And I was never told by Reddit why I was removed. They said I broke their terms of service, and the assumption is that I tried to monetize the community. But that doesn't really add up to me because, number one, I've been selling this book for months before I was removed. Number two, the mods that took over and the mods that wrote that post have been selling T-shirts and merchandise and magnets or whatever for years and years and years. And to this day, they continue selling that merchandise, and that is profit for them. They keep that money. That's theirs. They have a Redbubble store, and they make their little T-shirts, and they sell them, and they keep the money. So, me writing a book and selling it doesn't quite add up because they did the same thing. The second thing that I can point out, based off of public information, to kind of combat a little bit of these rumors, is that I try to create a scam based off of this trading competition. They said I was going to do a trading competition to steal people's money. And to that, I'll just use common sense. And the common sense is, I did want to make a trading competition, and I will make a trading competition, and I will make money from making this trading competition. That's what we're all trying to do on Wallstreetbets. And I haven't heard a single person to say it's a bad idea to turn Wall Street into an esports. And the common sense would be to me, where do you think I would make more money? By running a scam, right, and stealing people's money, or by actually doing this trading competition and repeating it instead of going to jail and doing it next year and the following year? So it's much more, it's in my best interest to actually pull this great idea off than it is for me to try to steal people's money. And that particular explanation would solve itself, because this year, when I do create this trading competition, it will be evident that it's not a scam.
Can you elaborate on what a trading competition is? Is that typical of a trading community, or is that something completely novel that you've come up with to build your esports out of? It doesn't exist.
Completely novel.
Okay, new thing, your idea, and you're creating an esports game out of a trading competition.
Yeah, I'm not trading. I'm not creating a game. We're trading, right? So if you can think of like watching chess or watching poker or watching, any other type of or watching esports where you're playing whatever, Call of Duty or whatever, where you have a competitive kind of sport out of something and you're watching and you're having commentators. We're going to do that with trading. So you'll have these guys that are going to get up on stage and they're going to trade on their broker with their own money in front of everybody. And everyone's going to be able to watch these guys trade, and they're going to watch these guys make money or lose money or whatever. And you're going to have commentators that explain the different things that are happening, and they're able to, this guy's doing, with the stock options, he's doing an iron condor, which means whatever, and draw on the screen. And turn it into a spectacle, into watching into a live event to see who can make the most amount of money, or who can lose the least amount of money, or or who's the last one to lose all their money. Who knows what's going to happen? But the idea is to be able to turn this into some type of a skill.
I see. So it's like organizing an event where, traders come in and gamble at the same time, and then you're allowing people who are observing this game to also bet on it. Is that right?
No, they can do, well, they're not betting on the outcome of the game. They can do whatever they want. If they're sitting in the audience and they have the Robinhood out, they can do it if they feel like it. But they can tag along with trades if that's what they want to do, right? But if you think about like Dave Portnoy, that was doing a lot of this live day trading, and there's a lot of people that were able to do that as well. It's still going to be a complete hit or miss as to whether, even if you try to coattail somebody's trade, the execution of that particular trade is going to give you the outcome. So it's not enough to say, hey, I'm going to short this or long that. There's a lot of things. And so I don't necessarily think that'll be the best idea for people, but they can do that. But they could get to know the different players. They can get to know the different personalities and the different styles for trading, because there's a lot of different things out there. And they'll be able to watch somebody do this live. Like I've never, I guess Dave Portnoy was the first one to really throw it all out there in a live fashion all day long. But I've never seen people of all walks of life do the same thing with their different techniques. Some of them can be YOLO meme stock trading, and some of them can be from Goldman Sachs, and some of them can be off the street, and some of them can be whatever. And have them all kind of go head to head to each other to see who can do it the best.
So you're creating the UFC for trading.
There you go.
With all the different styles.
That is absolutely the closest analogy when I try to explain it to different participants. UFC is the one that I really like to focus on. Yep.
Right. Yeah. And so these different MMA style fights are going to, the best style of fighting, so to speak, is going to be the ultimate winner in the end.
And there's luck involved, and there's all sorts of other things, but absolutely. Yep.
Okay. So that's really interesting. I've never thought about a trader as a potential athlete, but maybe you'll get this movement going in the future.
That's the idea.
Yeah. I want to ask you about your book, because I actually wanted to write a book myself. And so, if you could elaborate about what that process looks like too, I think that's interesting.
Sure. And I can get into that, but I also just want to let you know that I am running a little bit short on time. So I just keep that in mind. So writing a book, writing a book was the last thing I ever wanted to do with my life. I was terrible in school when it came to English class and reading and comprehension. Like, it was just the worst. I was good at math and science, and I was good at technology and programming and physics and whatever, but just English and me did not get along at all. And despised having to write essays in school and whatever. But I had this idea back around the time I started Wallstreetbets. I started kind of gathering some thoughts, and a lot of it started around ETFs and things that I found ridiculous and wanted to explore further. And, life happens. I don't really get the motivation to want to do it. And then life happens some more. And then come 2019, I'm thinking to myself, all right, I think this is a good time because a lot of things have changed since I first started writing these ideas down. The market has evolved. There are a lot more retail traders. You have a lot more open brokers. A lot of these points I wanted to make before are now exaggerated to the point where it'll make sense. And so I literally just sat in front of my computer every day and I started kind of putting an outline of the different chapters I wanted to make and start elaborating. And throughout the day, I've always got my cell phone so that I can write different ideas or different lines that I want to throw in there. Do some research for backing up different points or maybe being wrong about some points. And at the end of the day, the book itself reads relatively easily. It's walking through the absurdity of the market and explaining a lot of the different concepts, but doing that accompanied by stories from Wallstreetbets, from people on the forum, did a lot of these stunts that makes things really entertaining.
Right. So in the interest of time, I'll close with the last question, which is, can you tell us more about the backstory of the Wallstreetbets kid? And if there's any nuances with that history? And that
I cannot.
No. Okay. All right. Final question. So that's something that we'll find out in the future.
You will find out in the future.
Okay, great. Okay. Final question, which is, Bitcoin ETF, what are your thoughts about that?
Yeah, I'm surprised it's not out yet, that I know of, unless you're telling me now that it's already out. It's the fact that you have futures for Bitcoin, it makes me surprised that they haven't come out with an ETF for it yet, because you can make an ETF for pretty much everything. So, that's going to further put Bitcoin on Wall Street's exchanges. And I think that's going to be good for further legitimizing it, but not that it really needs it. Bitcoin has crossed over the barrier. And so I have several other coins. You have, I know on my PayPal, I can buy it now. I know MasterCard wants to take it. A crap ton of merchants can take it now. Tesla is looking into that. It's a thing. It's a medium of exchanging goods and services now. It has accomplished its original goal. It's got some improvements to make, and I know that it has some deficiencies with that particular technology. But as far as the wide scale acceptance of it, it's there. I think that some of the things that we're that we're watching right now with NFTs, I think that's happening because people want to kind of catch on to the next Bitcoin. I think that a lot of people that ridiculed it at first are not laughing anymore, and they're saying, okay, I was wrong about that last time. I'm going to go ahead and jump into it this time. And I think that's propagating a lot of that excitement. But I think it would be really good for Bitcoin. To me, having it be stabilized a little bit, I think it's the best thing that could happen for it. A lot of people say, what do you think about Bitcoin? And that question is always, it's two-sided. It's like, what do I think of a digital currency being used as a medium of exchanging goods and services? Or what do you think of it as an investment, right? Because they're two different things. And I believe that the coin's strength is going to come from being a currency, which is what it was meant and designed to be. And once the more stable it becomes, the more able it's able to do that more. A lot of people that are into cryptos are looking to just get rich with them and invest into them. And so kind of goes against the original spirit, but it's not contradictory. They kind of go up in tandem. There's a lot of things there's alternative assets that are used for keeping up with inflation or whatever. But the reality is most people that are going into these crypto coins, unless they're buying the USD coin, they're doing it to try and make money, not to buy and sell things. Although there's a lot of them that are. So I think an ETF would help stabilize the coin and further allow it to be allow it and other similar coins to be able to use as a universal currency.
Right. Yeah. From your stance, it sounds like you would actually be most aligned with the Bitcoin Cash community because they think Bitcoin Cash was the original Bitcoin and it's used as a medium of exchange, and you're supposed to be able to buy coffee with it.
That's the idea.
Yeah. Okay, well, thank you for your time, Jamie. This was a great interview, and see you out there.
Thank you. Take care.
Bye.
Bye-bye.